Yo, what's going on, guys? Welcome back to the Team Ivy League Education channel. And also, if you guys haven't joined Ivy League University, make sure you guys check that out down below. Also, make sure to like and leave a comment. And if you'd like to help somebody out, share this video as well. We will be bringing a bunch of new stuff to the table today. And the best thing about this is you can use it every single day. You can use it on every single trade. You can use it on every single pair. So today we're studying quarter point. I'm going to show you why they're so valuable and how to use them in an everyday market situation. Let's go ahead, head over, check out the charts, and let's get it. Okay, so first off, I'm going to go into what quarter points are. Okay, so quarter points are institutional trading levels. Okay, and they're identified by quarter points. So if you have one quarter in your hand out of $1, right, you got 25 cents, 50 cents, 75 cents, $1. So anything that ends in 0, 0, 25, 50, 75, or 0, 0 is going to be a quarter point. Now, there's strong quarter points, and then there's minor quarter points. So like minor quarter points would be like on a pair like NAS or like gold, or you could even do like any of the indexes. Really, there's gonna be minor and majors. Now on a regular pair, let's go over here to GBP JPY. There's going to be more major quarter points, so there's only those. There's not any more. Okay, so first off, let's go back to NAS so I can show you guys this example. So quarter points, if I've identified them correctly, they should be at my 250, 500, 750 and above. And so what you look for around those levels is a key level, a support, and usually too, the market will either strong break those levels or strongly resist those levels. So let's say on NAS, for instance, like yesterday, we were looking for sell entries on it. So we see it pushing up here. So I'm not looking for an entry quite yet. If you guys are in my Telegram, which is also link is down below, but I call the sell at 11,180. Okay, because it was really close to 11,175. So 11,175 was about here. So 11,175. That's a quarter point. Okay, so I figured if it was going to reject that zone, which is also a previous key level, right? If we go back, that 175 is really, really good. It's really strong all the way back here. This is back in August 12th. So looking at it now, we can see that it did reject that zone, and then look what happened next. Went down to 10,950. Okay, and that's what it rejected off of. So if it were to break 10,950 right here, we could look for a potential sell entry again once it broke and then retested that quarter point, which is also my key level. Now, those are minor quarter points because it's 10,950. Right? If it were 10,000 or 10,750, that'd be a more major quarter point because it's a larger quarter, right? Does that make sense? So if it doesn't make sense, let me know, but I'm gonna explain it right now anyways. So right here, same thing, 11,075. It's kind of in the middle. Now if I go back up here to this more major or my high, look at this level right here. So this level is 11,250. It's not 11,025. So 11,025 is like the minor ones are going to be weaker. The more major ones are going to be a lot stronger. So if you guys want, you can literally just trade off of quarter points and be profitable, be consistent. So once it hits the quarter point, you'd either look for some type of reversal formation, or if it's got momentum when there's a high volatility like in London or New York, you can expect it to break that quarter point. But also too, if it's already too much in the move, like this one right here, so this 11,180 sell was definitely valid again because it's right at the top. Volatility is opening up. This is about 3 a.m. So it's mid-London for me. I'm on Pacific Standard Time. So mid-London heading into New York. Let's see New York open right here, 6 a.m. was that volatility push. So we can assume that it's going to continue to push down like it did. Now, this trend line I had was our take profit. But as far as breaking through zones and whatnot, the higher the volatility, the more likely it's going to break or reject. So like let's say right here it's say it's 9 o'clock at night Pacific Standard Time, and we think it's going to break the zone. Probably not because there's no volatility then. If it's like this, if it's 2, 3, 4, anywhere up to midnight, there's not going to be enough volatility. So more than likely it's going to reject that zone. Now, like I said, again, pay attention to what time you're trading these pairs. Make sure you guys, if you're looking at the strategy, you're also using other forex knowledge. So that being, price action, informations, W's, dojis, whatever it may be, to add more confirmation to it. Now, if you guys have watched my RSI video, which I also have up, you could have also used this RSI video here. So we do have that 11,075 point, which is that minor quarter point, right? So at that point in time, the RSI was below 50. So remember from the RSI video, Once the RSI crosses below 50, the sellers have now taken control. So you would have multiple different entries based on the quarter point and the RSI. Now, institutional levels, to break it down to an even further level, that's where banks normally trade. So banks will trade at major ones though. So 11,250 to, this one here is 11,000. So 11,000 would be a whole number, right? So that's another quarter point though. It's 0, 0, 0. All right, guys. I think that's going to be it for this video. It's pretty simple. We can go into, let's go check out GBP USD real quick. So if I do a fresh markup on GU, I'm literally going to go through and do my major quarter points, okay? So I'm going to look at the price on the left. So I got 30, 30, 250, 500. Then I'm going to go down. Got 750, 500. I'm not looking at the chart at all. I'm just strictly going off quarter points, 250. Okay, so now we have our quarter points marked up. We could go between the two that were tapped the most, all right? So we can go down here, let's go 29,000 as well, or 2,900, 29,000, yeah. All right, so those are all of our quarter points within this range. So now we can identify, okay, we don't need this one. This is where people can get messy with it. This is where you can get really clean with it if you know what you're doing. So since we don't need this upper one, we can delete it. If you guys want, you can leave it for take profit, actually, right? Or if it breaks and retest these and if it doesn't break below this again, then you can probably buy it there. So like, let's say this price right here went up, tested, you could buy it from there to at least here, there, and then if it would have broken that, at least up to that next one. Right there. So typically when a pair is taking a huge dive, like it is right now, typically when a pair is taking a huge dive like it is right now, where did it turn around? Literally right at 752. So if you would have known about quarter points, you'd be like, okay, I've already sold it, I'm in profit, where am I looking to take profit? You can go to the next major quarter point down or next major zone down. So again, with other Forex knowledge, we could have sold this and then this could have been our take profit. As far as this one too, 750, 27,750. Look. Beautiful. Double wick rejection on that. So we can sell it right here, right? And then this also gives us a super tight stop loss, so we don't have to risk 90 pips or 100 pips to take this trade. If I sell it right now, my stop loss only has to be right above that quarter point. I can risk 10, 15 pips on this trade. And then so if I'm risking 10 to 15, let's see, does it match my criteria? Let's say we got in right now. So if you want to go for at least a 2-to-1 trade, right? So if I get in right now, my 2-to-1 trade is going to be my take profit down here, stop loss right above that quarter point. I'm risking 19 pips to make 88 pips. So it's a 4.6 risk to reward ratio. That trade would definitely be valid. Okay. If you guys have any questions, actually, real quick. If it does break above this quarter point, we can either put a buy stop above it for that breakout strategy and then sell stop or stop loss below. Or what I can do is wait for the break and the retest for more confirmation of that buy. So once it breaks and retests, I could buy on that quarter point with my stop loss below it, and it will continue up. And again, super low risk. Let's see how much we're risking. Even if you were to lose these trades, if you were to lose, like, you probably lose you probably win like 1 out of every 5 trades and still be okay just using this. So it goes there. That's our stop loss. This is our buy. If we didn't get a perfect entry, let's say we got in right there. Go up to our next take profit. Be 118 pips. That's solid. Even if we go to our next little quarter point, let's go 28.5. I normally trade on the 4-hour time frame, you guys, so I'm just using the 1 hour for this demonstration. Okay, so here, that looks okay. But even still, if it were to go up to there, would it match our criteria? Can we take this trade and be safe? Yeah, still a 4-to-1 risk to reward ratio, so it's a super solid trade. If you guys have any questions, let me know. See you guys next time, and I hope you guys have a great day. Also, too, check the links below if you guys are not in the education channel, if you guys are not in the Signal group, has all that stuff down below. Also, Ivy League University is launching this Friday, so 3 more days. Anyways, you guys, make sure you guys pay attention, be on the lookout, and I'll see you guys next time.